StashAway has recently launched a new feature called ETF Explorer, and instead of the usual pre-built portfolios and automated strategies, ETF Explorer works more like a brokerage platform. It lets you pick and invest into individual ETFs directly, charges a flat $1 per trade, and has no annual management fees. Now, you might be thinking, "Che, it's just another low-cost broker. We already have a ton of this in Singapore lah." Honestly, that was my first thoughts too. But as a dug deeper, I realized there's actually one feature that makes ETF Explorer stand out from the rest, and that is SRS investing. Or more specifically, it allows you to use your SRS funds to invest into ETFs that are normally excluded under the SRS scheme. Got your attention yet? That's why in this video, we'll be looking at ETF Explorer, how it works, how it compares to other brokers, and why this might actually be a very useful feature for some of you guys. Okay, here's a quick intro on how StashAway ETF Explorer works. It gives you access to over 80 different investment ideas, covering a wide range of asset classes. You'll find all the usual favorites like the Nasdaq 100, S&P 500, Gold, Global Equities, and China, along with more specialized themes such as semiconductors, energy, information technology, blockchain, financial services, and others. But here's the interesting part. Instead of leaving you to sift through dozens of similar ETFs for each investment idea, StashAway has already pre-selected one ETF for each of them. For example, if you want exposure to the S&P 500, the chosen ETF is IVV. For global equities, StashAway uses IZAC. And for China, the ETF is iShares Core MSCI China ETF. These ETFs are selected based on the cost efficiency, historical performance, and risk management. Then, once you have chosen your investment idea, you can proceed with investing via cash or SRS. Now, as you may have already noticed, many of the investments available on StashAway ETF Explorer are not part of the usual SRS approved ETF list. Take for example, StashAway's chosen S&P 500 ETF is IVV. But IVV is not on the SRS list. Its Nasdaq 100 ETF is QQQ, is also not SRS approved either. Even something as common as GLDM, their selected gold ETF, is not on the SRS list either. This highlights one of the biggest frustrations with SRS investing. The approved ETF list for SRS is extremely narrow. If you want exposure to major global indices, sectors, or asset classes, there's usually no eligible ETF that gives you that exposure. Instead, you have to look for unit trust as a workaround. For example, if you want exposure to the US markets, you might have to use the Harmony Prime USA Fund, which tracks a similar index. However, because it's a unit trust rather than an ETF, the structure is different. And that often means higher ongoing costs and sometimes sales charges, making it less cost efficient than ETFs. This is where ETF Explorer changes the game. By allowing you to use SRS funds to invest into these ETFs directly, it suddenly opens up a much broader range of investment options that were previously inaccessible. On top of that, ETF Explorer lets you benefit from lower fund level fees, since ETFs generally have lower expense ratios than unit trusts, as well as lower platform fees, since StashAway ETF Explorer only charges a flat $1 per trade and no annual management fees. But angat bolas aside, here comes the important question. How the StashAway ETF Explorer actually compares against other platforms that let you invest your SRS money, specifically Poems, FSN1, and Endowus? To answer that, let's take a look at two of the most popular SRS investment themes among Singapore investors, the US market and the global equities market. For the US market, I'm comparing investing through StashAway ETF Explorer using the IVV ETF against investing the Harmony Prime USA Fund through Poems and Endowus. Meanwhile, FSN1 doesn't currently offer a comparable low-cost US option. I also factor in not just the fund level expense ratios, but also the dividend withholding tax and StashAway's 0.22% currency conversion spread, which I've gotten from StashAway's cost comparison page itself. Over a 1-year horizon, Poems comes out as the cheapest option. This is because the Harmony Prime USA Fund has a super low expense ratio of 0.05%. Meanwhile, StashAway ETF Explorer comes in second due to its one-time 0.22% FX spread and $1 trading fee, while Endowus ends up as the most expensive option due to its 0.4% annual platform fee. However, the picture changes when you stretch the investment horizon. That's because both the FX spread and the $1 trading fee on StashAway are one-time costs. So when you spread this over many years, their impact becomes much smaller. And by the 10th year, the total annualized cost of StashAway ETF Explorer becomes almost identical to Poem's. This means that for long-term investing into the US markets, both StashAway ETF Explorer and Poem's are essentially equally cost-effective, while Endowus remains the pricier option due to its recurring platform fees. Then, what about global equities? For shorter horizons such as 1 year, Poems is again the cheapest platform. That's because it only incurs the expense ratio and dividend withholding tax, whereas StashAway has to account for its FX spread and trading fees. But once the investment horizon reaches 3 years, StashAway ETF Explorer actually becomes the cheapest option. This is because its one-time fees get spread out, so it becomes negligible when averaged over multiple years. But more importantly, the IZ ETF, which StashAway uses, is domiciled in Ireland. This means it gets to enjoy a lower 15% dividend withholding tax as compared to the 30% on the Amundi funds, which are domiciled in Luxembourg. So, for investing in global equities over the long term, StashAway is actually most cost efficient as compared to Poems or Endowus. However, with that being said, while StashAway ETF Explorer has plenty of strengths, it is not without its downsides. So here are a few important limitations that you should be aware of. The first and arguably biggest downside is that you can't pick your own ETFs. StashAway has pre-selected a single ETF for each investment idea, so your choices are effectively limited to their curated list. This lack of flexibility may be frustrating for more experienced investors who are used to choosing their own investments in traditional brokers. That said, there's a potential upside to this approach. That's because StashAway monitors its ETF selections, and if they happen to find a better, more cost-efficient, or higher quality option for that asset class, they may replace that ETF for you. This means you don't have to manually track and switch your ETFs yourself. Next, another limitation is that Singapore-listed ETFs are largely absent from here. For example, if you filter the region by Asia, you'll find ETFs for Japan, India, South Korea, Vietnam, China, basically almost every major Asian market except for Singapore. This means you won't find some of the popular local ETFs such as STI ETF, ABF Singapore Bond Index Fund, or the Lion Philippe S-Rich Index on ETF Explorer. Though in practice, this isn't a deal breaker since these ETFs are easily available through other brokers such as Poems or FSM1. Lastly, trades on ETF Explorer are not executed in real time. Unlike regular brokers where trades are processed instantly, StashAway only executes orders as the next markets open. For example, if you place your trade on Tuesday afternoon, it will only be executed on Wednesday when the market opens. This delay means you might miss out if prices move sharply overnight or during periods of high volatility. However, for most long-term investors, this isn't a significant issue. ETFs generally don't experience wild intraday price swings, and if your investment horizon is measured in years rather than days, short-term fluctuations shouldn't matter. It's also worth noting that unit trusts such as Amundi Prime USA Fund operates in a similar batch execution model, so this limitation is not unique to ETF Explorer. Now, of course, while there are a few drawbacks to using StashAway ETF Explorer, there are also several useful features that make the platform appealing, especially for long-term passive investors who value simplicity and cost efficiency. First, dividends are reinvested automatically at no extra cost. This means you get to activate the magic of compounding without having to manually monitor, collect, or reinvest your dividends yourself. This is a feature that many traditional brokers either don't offer or charge extra for. Second, ETF Explorer lets you set up recurring investments. This is a great feature for anyone practicing dollar cost averaging. By automating your money contributions, it helps you stay disciplined and avoid the temptation to time the market. Over time, this can smooth out your entry prices and build wealth steadily without requiring constant attention. And lastly, there's no minimum amounts required to start investing. This makes ETF Explorer especially beginner-friendly as it lowers the barriers to entry. This is perfect for new investors or those who prefer to start small rather than committing a large amount upfront. That said, it's still worth noting that SRS operators will still charge their own administrative fees, typically around $2 to $2.50 per transaction. So, while StashAway itself doesn't impose a minimum amount, it usually makes sense to invest slightly larger amounts to ensure these fixed fees don't eat into your returns unnecessarily. Finally, if you're interested in using StashAway ETF Explorer, you may want to take advantage of the latest welcome promotion. When you sign up using my link and invest through ETF Explorer by 31st October 2025, you'll receive a 1% rebate on your invested amount, capped at $50. And the rebate will be credited back into the same ETF that you invested in. This offer is available to the first 1,000 eligible clients only. But don't worry, once the limit is reached, StashAway will make an announcement on their website. So, if you have been planning to use your SRS funds to access global ETFs or to set up a recurring investment plan, this promotion is a nice bonus, as you are effectively getting a 1% head start on your investment since day one. Anyway, that's all for this video. Hope you found this useful. Like, share and subscribe as I'll be posting new videos every week.